All right, the fiscal cliff, obviously, we've been talking about it so much, right? Talking about it so much. The market, they're worried about it, right? Maybe not. Maybe not. Maybe the market isn't worried about it. Steve Russolillo.
Mr. Vigna.
How are you?
Doing well.
I haven't seen you in a week.
It's been a while.
Yeah, it's been a while. Let's talk about this because it really is amazing. We've seen the stock market go down. We in the press, we're always talking about the fiscal cliff. This is the big story coming out, big drama out of Washington. But by some measures in the market, it's really not. It's not bothering people.
Yeah, you know, the VIX is the indicator that we really follow closely, or the market follows closely, and this is sort of the market's so-called fear gauge. And basically, when there are times of stress in the market, the VIX tends to rocket higher.
Right.
When times are pretty calm, the VIX is pretty low. Now the VIX is around 15, which is well below its historical average, and it's strange, and a lot of people are viewing this with a cautious eye because they're saying the fiscal cliff is a big concern. Why isn't there much fear in the market?
And you can see there, you know, it's up 2.7%. But I mean, it has been low throughout this entire fall sell-off.
Right. And the one big concern and the one big comparison that we made in the story today was that this same VIX, weeks before the debt ceiling debacle in early August of 2011, weeks before that, it was also around 15. It was also showing pretty calm levels. So back then, even though people knew that the debt ceiling was coming, there wasn't much fear in the market. Then all of a sudden, the debt ceiling came. You had the downgrade. The U.S. debt credit rating was downgraded, and the market shot way lower. There was big volatile swings, and the VIX went from 15 to as high as 48. So it more than tripled in the matter of weeks. So now you fast forward to today. You have a similar pattern developing here. The VIX is around 15. It stayed low for a while, and the worry is if the negotiations are as contentious as they were a year ago, the VIX could then skyrocket higher, and if the similar thing were to happen, you could see some volatility in the market. Now, the one difference being, and this is what a lot of people pointed to, is December is historically a low volatile time period. It's the end of the year. The market tends to slowly move higher. But, you know, if you look at those historical trends, though, you didn't have a fiscal cliff coming at the end of the year in those previous years.
So is this kind of, you know, you look at stocks falling and you say, oh my God, investors are worried about the fiscal cliff. Then you look at the VIX and you say, well, maybe they're not. Is this sort of the market's vote on what's going to happen in Washington, and the market is saying, yeah, they'll come up with something?
That seems to be the big consensus right now, is that some sort of deal will happen. The details, obviously, that's a whole nother story, but some sort of deal will be hammered out even if it goes till the 11th hour. And so you're seeing that not just in stocks, but you're seeing it in the gold VIX, the silver VIX. You're seeing it in all these other markets, too, where volatility is really low. And so, you know, the one market that we pointed out where it's not so low is the high yield market. And so that's interesting. A lot of people worried that high yield is getting too pricey. So, but that's a whole other market. But right now, though, it just seems that for stocks, for gold, for silver, volatility is low. People are calm. There's not a lot of fear out there. We'll see.
All right, Steve Russolillo, thank you very much.